Hello and welcome to Trading the Trend. This green shirt is for other areas outside semiconductors. If I actually had another shirt, we put a red shirt on for the semiconductors, which we will talk about. Now, just real quick, today we want to talk about current positions. We want to talk about even maybe going bearish some of the semiconductors. The keyword is some. Then we're going to talk about some new positions. And as we do that, we'll obviously talk about the market and answer your questions as we go. Yeah, there's some interesting activity happening in the semis. It started probably about 2 days ago and yesterday. And then furthering on today, it's not just selling pressure. It's some of these semis, some are starting to even breach support levels, which are significant. Okay. And we'll show that here in just a second. Now, just real quick as we get started here. Remember that we asked the question each Thursday, what trends are you riding? The trends that you're riding are important. It could be like savings trends that you have. It could be investing trends, savings that turn to investing, and you're trying to actually grow that money. The more of the story is we're trying to ride a trend to actually get a compound rate of return. Very important, okay? Because one day you might be living on those retirement funds. Hopefully, right? That's the goal. Now, remember with what we discussed here today, we'll talk about stocks and options. Remember that options carry a high level of risk, not suitable for all investors. When we talk about the examples, the information we talk about is done for general informational purposes only. Remember that our examples will be done in the software paper money application for educational purposes. We'll also remember we want to talk about how investing involves risk, okay? So we sometimes don't think when the stocks actually go up, there's risk. There's always risk, okay? It's like air, okay? Without risk, there's no reward, okay? And so understanding that is important and kind of managing that risk and what are some of those options there. So first off, let's go take just a quick look at some of the major things that we are seeing in the marketplace, okay? So now I'm going to kind of fast fire on these because we want to really get to the examples in the portfolio. Past and new examples, but let me kind of just fast fire. So Dow Jones, again, kind of something a little different here. Hit a brand new high here today. Not everything's the Dow. The Russell, which actually hit a brand new high yesterday, down 1% here today. Now, small caps, for some investors, they're like a proxy for risk taking. So if the small caps are actually going to the upside, maybe investors want to take risks. Why is it a proxy? Well, because they're higher beta. What does that mean? They tend to be more volatile than the overall market. You don't buy the small caps if you actually think there's a lot of volatility coming in the marketplace typically. So small caps pulling back. I mean, changing the trend, we wouldn't say that. But if we look at the S&P 500, you are going to notice, again, tech heavy here. Did it change the trend? No. Did it go up to an intraday high? Yes. The SPX EW, which we've been watching like a hawk, went up to a brand new high here today. That's not the issue. The issue is actually going to be really found in really the NASDAQ itself. Did the NASDAQ break horizontal support? No. But what in the area of the NASDAQ actually really breached or is actually having some carnage there? And it's the semiconductors. And remember those four white oval lines, or five, that we actually drew? We talked about the diagonal support here. Well, what do you notice really on the semiconductors? What do you notice? Now, if I connect these dots from low to higher low, et cetera, et cetera, et cetera, what do you notice? Well, now that you're going to see in this case is we've now today, and even yesterday to some extent, even started to break that support level. So the biggest actually thing is, when we actually talk about this, okay, sometimes people ask the question like, why are people selling? The answer is simple, because it's breaking support, okay? Now, could they be manually selling? Sure. Could they be setting stop losses? Sure, okay? All of the above. Now, you might be saying, well, why are they selling? Like, well, sometimes you got to remember, where do people probably have the biggest amount of profits? It's in the names that went up the most. And what are those? It's in the semiconductors, okay? So the thing is, if those things start to fall back down, those investors might say, look, I want to try to take some of the profits, some of them. Did they sell all the shares? They might. Did they sell some? They could, okay? Check liquidity. Now, the thing is, the comment is from Sam, desperately seeking cash. Kind of, here's the thing. If you're investing, it almost always seems like you're low on cash. Does that make sense? It almost always seems like you're a little low on cash. I think it's just more about like trying to put the cash in positions that are upward trending. And as of this morning, you didn't see actually the stock staying above that diagonal line, which it had before. And so I'm not sure if it's desperately seeking cash. I think it's just kind of trying to put the cash in positions that are above support. Support is the trust level. Now, if we actually also go back to the other areas. Now, this morning we saw on the sectors. Did anybody notice anything a little unusual on the sectors? Anything unusual? Now, this should stand out like a sore thumb. Wait, you got healthcare at the top. Wait, you got utility, staples at the top. Wait, you got utilities at the top, gold at the top, and real estate. 4 of the 6, 5 out of the 6, if you include gold, is really kind of sometimes semi inversely correlated to the market to a degree. Lower beta tends to be more income generation. Okay. So seeing those at the top that smell that, no, they don't smell anything. It's a little defensive. Okay. Now we don't see discretion at the top. We don't see tech at the top. Not right now. So seeing these all kind of in the corner, if you will, or on the top of the list, that's a little interesting. Okay. Now, it doesn't mean that they're bearish truly, but usually someone might buy these areas, these healthcare, utilities, staples, real estate, gold, etc. If someone actually says, I want to actually buy things that are lower volatility, typically, not that they have none, okay? So we actually see, if you look at healthcare, brand new high. Staples, what do we got there, staples-wise? Okay, staples, there it is. Staples did not break out, but there are some stocks in there getting a move. Remember, if the sector is showing neutral, it doesn't mean everything's neutral, right? If you look at that's like saying I'm middle class and no one's wealthy. That doesn't make any sense. Okay. Now, if you look at, let's say, utilities, let's say it's the strongest. Healthcare. If you look at gold, is it reversing? Ah, man. I mean, I'm not sure if you'd say it's reversing. It's an up day. Is it breaking the diagonal line? Can't say that. Financials, if you look at that, there she is. Okay. So some of those financials still getting a push. Real estate, not breaking out. So now, by the way, again, that doesn't mean that something in the real estate space is not going up. Just the area is going sideways. And energy, we don't need to look at because we know that's been at a recent low. Yeah. Now, if we're talking about industry groups, right? We talk about biotech. You could say it's under healthcare. It's under technology. Well, let's just bring that up. Okay. If I actually brought up, for example, go trusted iPad here just a sec. If we actually said, what is, in terms of the industry groups, what is getting a little push? Let's actually pull this up. So just kind of, the one thing that we would also say, you said biotech, we'd actually have to say pharma, okay? The other area that's getting a little push here today is aerospace and defense. REITs, okay, is stronger than the real estate sector itself. If we also look at, just double checking if there's anything else. The cybersecurity has gone up, 5 out of the last 6 days. Yesterday was a brand new high. And the one area that you're kind of seeing a little softness is in the airlines. But those actually went from, they went up probably about 20%, but who's counting? Okay. Now, let's actually get to work here, okay? So not everything, we know that if we kind of said, where's the damage? We know it's in semis. We want to go to the paper money account right now and say, what do we got, okay? Right at the very tippy top. And this is listed by A to Z on stocks, okay? Now, obviously, we know we're in a little trouble on this. Now, sometimes in when you have a to-do list, you don't tend to want to do the things on the to-do list that make you think or you got to actually really work. Well, if you do that in the stock market, you're going to probably pay for it, okay? If you get an exit, you're trying to follow that exit plan criteria. Now, something kind of tells us we're in a little trouble on this. Number one, we got trend one. Now, if someone says, what is the recipe for actually gaining capital in the stock market or having unrealized gains? it's not trend one. Trend one is the prices down below both moving averages. When we actually look at, let's say, the whole moving average, it's a red moving average, and it's been that for 8 days, 5 days actually on the 20-period moving average. We're down 771 on there. Now, if we're talking about sell signals, two red lines on the moving average is not a recipe for growth, okay? And then when you actually say what type of trend is that, that is trend one. Okay, now let's go look at the chart just real quick, and I need you to tell me the hard thing. Okay, if we actually bring up ADI itself, we'll come to Caterpillar in just a moment. Does this look like a bullish trade or a bearish trade? Bullish trade or a bearish trade? Thoughts on that? Now, the concern really becomes is when you look at these bottoms, right? Low there, low there, low there, low there. So we've actually kind of had some touches right around about 384, okay? Now, how many of you have ever heard someone say, I like to learn about the stock market, but I don't really know when to sell? What I've learned in 30 years of doing this, I'm not really sure if that's true. They know when to sell, they just don't want to sell. So now nobody says, oh yeah, I like to take a loss. Some of us think about it a little different. I don't want to take a loss. I just don't want to take a bigger loss. Okay. Now, the one thing that we're going to do in this example is on ADI. This is something that is starting to break below support. Okay. And this is trade number one. First thing we're going to do is we're going to right click on this. We're going to create a closing order and we're going to sell those shares. Now, if we do that, what you're now going to see, if we sell those shares, okay, we're selling those shares there. Okay. And what you're now going to notice is we're going to sell those shares, right? Try to do it at the mid price, confirm send. So we're saying sell the shares if we get that price or higher, if we can. And that bid price is above that. So we're thinking that fill price might be pretty quick. Now, the one thing I want to kind of think about just real quick is some of the risk to this is, you know, some of the risk of these semiconductors is they went up so much, okay? The risk is that they could fall down even more. Does that make sense? Is everyone with me? So if I ask you the question like, where do you, for example, see the next potential level of support, what would you say? Now, if we don't see the next level of support, we want to know that because we want, just like if it's stock broke resistance, we say, what's the next level of resistance? We're actually thinking to ourselves, well, the path of least resistance, where might it try to go down to? It might try to go down to 355. Now, here's where we take this personally. Yeah, but ADI is a good company. No one's saying it's not. But if there's more sellers than buyers right now and they're controlling it, it could push the prices down. Okay? They're trading the equity of the company. Now, if you take a look at this, if we said a stock position, if we said it, we know with stocks, you can go long, buy it, or you could go short, bearish. Now, here's the thing. If you did this, you can only do it in a margin account. And second, you need to make sure, are there available shares within the brokerage house to do this? I'm going to do it on a stock position in a paper money account. You're going to notice 3 letters right there that says ETB, easy to borrow, meaning the broker has some shares that another client has that you could borrow those. Now, in a way, it's kind of like you go to a bank and you tell the bank, look, I'd like to borrow 20 grand to buy a car. Now, the question is, when they loan you the money, if they did, is it the bank's money or is it a client's money who actually deposited the 20 grand or more or less, culmination of all those clients, customers, in the bank? The bank never told you where the money came from, did they? They never did, okay? So the biggest actually thing is easy to borrow. It could be someone's position that has the other side of that trade. So think about that. If you deposit 20 grand into the bank and you're collecting interest, someone else comes in and they borrow the 20 grand and you pay the interest. Does that make sense? Well, it's similar when you actually look at the stock market. Okay. Now, the one thing about this is you might not be able to be short indefinitely. Okay. Second, you actually pay short interest, like an interest on a loan. And the other thing is in a bank And if you take a look at this, is the risk is it could go up to infinity. Now, the gain, the price could only fall down to zero. Now, we're not saying that. I'm just kind of showing just talking about the parameters. Now, what I'm going to do is if we click on the ask price, we're buying. If we click on the bid price, selling. Now, if I right click on the bid price, we're going to go sell custom and we're going to go with OCO bracket. Sell custom with OCO bracket. So if we sell custom, we're going short with a target at support and the stop above resistance. Now, here's the deal. If we looked at the portfolio and said, well, do we really do more bearish positions or bullish positions? Well, we do more bullish positions because the market tends to be more bullish. Not always. But what I'm now going to do is I'm going to say, look, can we just do example given? And I'm going to start kind of do a small trade. Maybe what about 25? Let's even say 25 shares. 25 shares would be about $7,500-ish worth of stock. I might be off a little. The target right here, we're going to say, look, if we fall down to that support area, 355, buy it back. Now, in this slang, if you will, I want you to say sell high, buy low. If you sell high, buy low, you're trying to make the difference. If you're bullish, you're trying to buy low, sell high. Just the opposite. Now, the one other thing that I did not make mention of, shame on me. Don't ever do that again. Well, the one thing is, does it pay a dividend? Well, whoever is long and owns those shares, they're expecting to get paid the dividend. So if this is going to be, let's say, if we're going to be short while they're paying a dividend, now the person who's short is paying the dividend. Okay. Now that ex-dividend date was June 2nd. So if we're in this a week, we're not going to be paying the dividend. Okay. Because that was a month ago. And it's a quarterly frequency. Okay. Now what I'm going to do is going to put that target right at 355. And the stop is going to be right above resistance. Now, even if you said, James, I would never do this in real life, this is a very learning moment. Because for most of your life, you've only been thinking, I need the market to go up. Well, that'd be nice. But sometimes the market goes down. Sometimes a position or an area, a sector, an industry group goes down. You want to at least be made aware of how to practice going short. Now, when we actually look at the stop, what I'm going to do is I'm going to set that stop right above today's high. That today's high is 397. I'm even going to put it right at 400, okay? So what we're going to kind of do is we're going to use this as an example of kind of practicing bearish, okay? So we're saying, look, go bearish at this price, okay? Buy that back at that price or less. Buy it back at this price or higher if the price were to go up, okay? Now, notice there's no expiration, there's no strike. You're going flat out short the shares of stock. If we go confirm send that order. Now what you're going to see on this chart is going bearish, stops above resistance, and that target right down there. Okay, now, so what does this look like? What does it look like? Well, now what we're going to see is it says minus 25. What does that mean? Okay, minus 25 is you went short the shares of stock. Okay, trade price was 376.10. The mark price is 375.89. And if that mark price is lower than the trade price, well, you're up. Okay. Now, do you have to be in this any length of time? No. If the stock actually goes down another $5, $10, and you say, look, I just want to buy it back and try to make the difference, could you try to do that? You could. Check liquidity. Okay. But this is the first learning step of learning to go bearish. It's not something you would probably always consider, but you also got to remember is it cannot be done in an IRA. It's only a margin account. You filled out a margin account application. You could actually see in the disclosures some language, some paragraphs about short selling. Okay, so feel free to actually look at that and review that. But I'm just kind of walking you through the basics of that. Okay, now if we actually went back to this just real quick, now so think about short selling stock as the stepping stone to maybe short call verticals. Step 2, short call vertical. Step 3 might be long put vertical. Step 4 might be short synthetics. So to me, just like when you learned, let's say, doing bullish options, before you might do bullish options, you did stock trading, right? Or stock investing or whatever. This is the foundation of really learning how to go bearish if you would consider, let's say, bearish option strategies. Now, what I want to do just real quick is let's kind of talk about a new example, if you don't mind. Okay, so we talked about a past trade example. Let's actually talk about, and we talked about the exiting of it. The first trade we actually did was talk about going bearish. Now, I'm not going to get fully into this, but you're going to see that there's a couple others that also are at risk of falling down further down. Example given, you got NU, which has kind of been the leader of the space. You have WDC, which is also down pretty aggressively. And the moves have been unbelievable. Can't feel bad totally for those investors who bought it a couple $100 ago, if they did. STX, Seagate Technology. So this is kind of like when you look at these charts, prices are below the moving averages. And one thing we kind of always talk about is if prices are below the moving averages and the moving averages are pointed down, okay, that's negative momentum. We're using the 10 as a proxy for momentum, and the 20-period moving average being a proxy for trend. Okay, so the thing that what can happen is sometimes is you're not looking at it because you don't want to, because you know it probably is down. If you did that, you're not really trading the technicals. You're trading around your feelings. The goal is that we're going to do is, I'm going to go back to this Caterpillar for just a second, okay? Caterpillar we've been talking about for about 2 weeks or so. Now, Caterpillar, just real quick, and again, think of this as like a job, okay? Where the person said to you, look, I want you to follow it religiously, discipline, whatever you want to call it, okay? And we've been talking about moving up the stops, okay? Well, what you're now going to notice is today, right about $13 ago, if you were using the 8-day low, that stop, if we were just moving it up to the white line, which we've been talking about, that stop would be right around 870.34. And what that's saying is sell if we get to that price or less. Now, James, why didn't you allow it to get stopped out? Because I want it to be a learning lesson, okay? So now if the investor says, okay, so I'm seeing some things go down. I have some gains on some of these. I want to see if I can't sell. Hopefully there's something left, right? And now what you're going to see is if we say sell, if we did that, this is saying sell at this price or less. Well, what did it get filled at? 959.31. So it was a trigger to sell. And that trigger was triggered, okay? And it filled at right there. So that stop, we had a stop at 970.34. Price was below that. The first available that could actually get filled at is 959. This shows sometimes the stops are not always going to be perfectly hit. Now, the one thing I would have to say that is kind of like leaving a bad taste in my mouth, let me get a drink, is it's never nice when you actually kind of say, gosh, dadgummit, it would have been so nice to sell $100 ago. Is anyone picking up what I'm saying there? Now, here's the deal. I've never usually talked about this, but I'll say it now, okay? And this is not the first time we've talked about this. I don't know for you, like, what is a good profit. I don't know, okay? Some people might say, James, if I get maybe a 2% gain on the portfolio, I'm not going to give back half. That means that they're probably going to choke stops even tighter. Or James, if I get up a position is move my portfolio 3%, I'm not going to give out more than half. If I go up 4% on my portfolio, I'm not going to get back more than half. Okay? So sometimes you're looking at the gains relative to the net liquidating value, and you're just saying, look, when these gains are home runs, grand slam, measured by what's the gain or loss on the dollar amount, define it, see what that is in terms of percentage. And if they are, let's say 2, 3, 4%, you might say, James, these are home runs, grand slams. I'm not going to just give it all back. Okay. And again, what that's going to do is the investor is probably going to choke the stops even tighter than an 8 or 10-day low. Does that make sense? Now, the other comment, let's go back to, there was a question on AMAT. Now, AMAT is actually one of those where if you looked at it, boy, it didn't go down quickly. Okay. Now, what you're now going to notice on AMAT is that actually stock, I mean, I'm not really sure. This AMAT would fall along the lines of the semiconductors. Okay. And by the way, when you look at also the other, when you look at one of the things that's kind of happens with the semiconductors, when they have gone up so quickly, okay, when they go up so quickly, you get a very, 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 very steep diagonal line. The problem with that is when they fall down, there's not a lot of confidence as far as where the support levels are. And so when there's not a lot of horizontal built-in support levels in something that went up really aggressively, you could get a lot of falling in the price action. Does that make sense? So not only did it break diagonally, but when there's big gaps from there to there, people are like, man, I'm going to get out because the path of least resistance is farther down. These are big holes in the chart. This is like the complete opposite of the Apple example, where when it broke the 288, the path of least resistance was 300. It breaks the 300, path of least resistance 313. So the bigger the gaps or the holes, okay, people become kind of more nervous on those. Yeah, exactly. Okay. So Scott Luck actually brings up, he's saying the same thing. He's just putting a dollar amount to it. But he's actually really saying is, there's $50 more to the downside. So the question might be, well, why don't buyers buy? Buyers don't tend to really buy because they're not really sure if where they are right now, the price of the stock is really at a real support level yet. Second, when you're looking at a red candle like this, where you're pretty much getting close near the bottom of the trading day, not a lot of bullish confidence. Okay. And the biggest actually thing is you're also in an area where the area semiconductors is being sold off. So the area is being pushed down, and then the stocks, which is a part of that grouping, is being pushed down. All right. Now, let's also go back to just real quick. So let's kind of take a look at a couple of these. Okay. Now, Johnson & Johnson was one of the long call examples. Just real quick. Okay. Just want to see if we need to do anything with this. Okay. Now, Johnson & Johnson, a 240 long call, has 15 days to expiration. Now, here's the thing we got to remember. Tomorrow, the market's closed. Then Saturday is the market's closed. Then Sunday is the market closed. And there's a little thing called time decay. Now, that time decay is $14 a day. Now, we've heard this said before. The longer you hold on the long call, closer to expiration, the time decay goes up. In my mind, I'm thinking about this almost like a parking fee. Yeah, I can park my car at the airport for $14 a day. However, as it actually comes closer and closer to expiration, that parking fee becomes higher and higher and higher and higher and higher. Well, that's not fun. Okay, now, so once you start getting down, now, by the way, by the time the market opens on Monday, we're going to be down to 10 days anyway. Why does that matter? Well, because remember, 4 to 10 days to expiration, we're looking to exit. Now, exit means sell the long call, take the gains or the loss, whatever it is. B, roll the position, exit the action of July, maybe go out further in time. Third is actually exercise the call. What does that mean in English? Exercise the call means you exercise your right to buy the shares at the strike price. How many shares? 100. At what price? The strike price at 240. If we buy 100 shares at 240, $24,000. The question comes is, do you have the money to buy that? We cannot buy $24,000 worth of stock when the portfolio is $53,000. So exercising that call, yeah, right. It would violate the position sizing rule. Denied. Now, if we pull this position back up and say, what does Johnson & Johnson look like? Could we just get out now?
You really could, and just try not to hold over, you're trying to get out and you're not trying to actually have that time decay. Now, the question I've always asked a couple people, market maker wise, I've never gotten a firm answer. When is the time decay taken out? Is it taken out on Monday morning right at the open? Okay. I have never, is it something where it's bled out through the day? In my observation and tracking this, it kind of seems like in the last hour of trading sometimes, maybe if they're, and I don't know, okay, but it kind of seems like in the last hour of trading, I'm throwing this out there, tell me what you've seen, that there might be some of that time decay taken out. If you were to buy the position, if you held the position on Monday morning, you ran the math and said, wow, man, on Monday morning, the time decay should be 3 days down, that's gone by, times the theta, and I'm expecting that drop on Monday. And the price didn't go anywhere, and the volatility didn't didn't move either. It doesn't tend to work out like that I've seen. So keep an eye on the last hour of trading, whether you long calls, do you kind of see the price is flat, volatility stays the same, and does it kind of look like maybe the position gives back? Keep an eye on that. In this example of Johnson & Johnson, even though it's showing a brand new buy setup, okay, we're going to get out of that long call because we're going to be on the doorstep of the selling zone anyway. Now, we're going to sell the July, okay, the 240 at 22.30. Now, remember, when you go 4 to 10 days expiration, the bid-ask spread tends to widen out, okay? So it's harder to get a fill. It's not that there's not more time. It's just people have actually said, look, I'm going to exit. They're not waiting to the last second to get out of the position. And so what tends to happen is liquidity tends to dry up. Liquidity drying up usually means bid-ask spread widens out, which means harder to get a fill. If we go confirm and send, note the commission there as well. We're going to try to take that 1665. We put in $575 or $575, exiting with 2227. Now it's not all gravy, okay? We actually look at that and say, well, when was the position purchased? It was purchased on the 9th, so it's about 3 weeks goes by. It's a couple of dollars. Maybe it could buy a sandwich, maybe in the paper money account. Now we're going to go send that, note the commission there, send the order. Okay. Now, are there any questions here? Yeah. Now, Chris also makes mention that it's a fair comment. Spreads get wide in the last hour, so that theta might be part of it. Fair. It's just interesting. I've asked multiple market makers, okay, and they didn't have a definitive answer, which I always thought was like, geez, if you wouldn't know, then who the heck would know? Okay. Now, that's kind of interesting. I mean, if someone knows the answer, I've never seen any literature on it. No one ever really definitively talking about it, even outside me asking questions to the market makers. It's important to know because if you had a bunch of long calls in your portfolio and the theta was 100, and when does that time decay come out, or when might it be potentially where you might benefit on the other side? You want to kind of know that. But it could also kind of be like dividends where it's like, dividends where you're thinking, oh, the stock price is going to drop. I can do a short sale and dividend payment. It doesn't tend to work like that either. So the timing is kind of interesting. Okay. All right. Now, I want to kind of fast fire through a couple. And we've kind of talked about Johnson & Johnson as well. We sold that long call. Now, a couple things we're going to keep an eye on. Some of those credit cards, Visa, okay. I'm just going to fast fire through a couple. MasterCard, okay. American Express, let's come back to that in just a sec. DFS, Discover, okay. I don't know why that's always it's the second time in a row it's had a little issue. Cut DFS. Yeah, it's struggled. DFS. And COP, whoops, COP. No, COF, sorry. COF, Travelers, okay? Travelers, I mean, you guys remember like Travelers checks? I mean, now I'm dating myself. Okay, Travelers, you're going to see that I think they also do something, maybe check me on this, in the world of credit cards. Check me on that. They do some other things as well. So that's the one that's maybe not as true credit card. Keep an eye on that, maybe. Okay. But we're going to put that in the area just to kind of. Now, the biggest thing I want to go back to the American Express. You got MasterCard, Visa getting a little push. The one that has a little movement here before the earnings might be American Express. Kind of has like a little bounce set up right here. I'm going to go back and I'm going to kind of go to, let's say, a put spread example. Now, you're going to see that in the paid money account, we already have shares already, and we have a long call there. I'm going to act like we don't have those. I'm going to go back to the August expiration. Now, by the way, why am I not going to act like that? Well, because this is pretty much going to come off probably on Monday. That long call has about 265 on it, and that's making us think, well, we got about 50%. No, we got over 50% of that max gain. You can do that math in your head. But if we actually take a look at this and we said, okay, the August expiration, what are the spreads like? Well, I mean, if we looked at the out of the money on the put side, 60 cents, okay, 50 cents, 35 cents, and so on. That spread, 55 cents. We've got to make sure if we did this, that the spread, that the fill is in the middle between the bid and ask. That's not the greatest spread, okay? Usually you would like to kind of see those bid and ask narrower than 20 cents for the most part. We're going to sell, let's say in this case, the 340. Now remember, if you sell a strike closer to the current price level, what does that mean? You're more bullish. You think that stock could stay above the strike that you're selling, and then you're using the 330 as the downside put. Okay. Now, the credit, 327, it's a $10 wide spread. That's going to actually also tell us what the max loss is. Now, remember, when you have the profit, max profit, less than the max loss, it tells us this is really more of a directional type trade. Note the commission. And now what we're going to go ahead and do is send the order. Now, Pia is asking the question about that long call vertical. Let's look at that. So this long call vertical, and let's just walk through the numbers, right? So we got to ask ourselves the question here. Now, by the way, well, let me show you a way you can cheat, okay? Not cheat, but use the tools, okay? But I do think it's actually helpful that if you needed to, you could. Just figure it out yourself. Go to setup. Let's go to application settings. And we're going to say positions. And where it says position PL layout day open, we're going to say percent open. So what we're wondering is what percent of the maximum gain do we have, et cetera. Okay. Now, if I do this and go to this, you're now going to see that it's showing right around 40-ish%. Let's double check. So when we look at this position, we got to ask ourselves, what was the debit of the position? Well, we paid $15.25 and we collected $9.85. So we got, in this case, the debit was $5.40. Is everyone with me on that? Okay. $5.40. You paid that minus, you collected that plus. All right. Now, what's the spread? The spread is $10. So now the debit represents how much we could lose. I'll put it in parentheses. Well, we're not losing, we're gaining. And so what's the maximum gain? It's going to be the difference here. The answer is $460 or $4.60. How much of that gain do we have now? Well, we're sitting at 255 of the 460. And we're going to come back and just do some basic math. 255 divided by 460, we're sitting at 55% of the maximum gain. Now, without even looking, okay, if we can get 50% in the first 10 trading days, 10 trading days, not TDs like touchdowns, okay, 50%. 65 if we have more than 20 trading days, okay, remaining. And 80% ever. Now, if we actually went down and said, well, where are we in this? We're kind of like right there. The answer is we need a little bit more. Now, we can ask ourselves, well, what would the gain need to be to hit the 65%? Answer, well, if the most we can make is if we actually said 460, what would the gain need to be? Well, 460 represents the max gain. I want to make, the investor says 65%. We would need the gain to be about 299. So we need this position to just go up a whopping 45 more dollars, and we'd be sitting at that maximum, well, that 65% gain. Okay. So the answer is not very much. Now we could do the math in our head. Usually a vertical has a delta of maybe about 10. So if we're actually trying to get another $40 and the delta is about 10, we would need the stock to go up about $4. Okay. So you can do the math in your head and say, look, I'm trying to make 40 more bucks. The delta on this position is 10. I need the stock to go up about $4. Where's it now? 349. Go up $4 more. Give me 353. I said, please. And we go up to 353. There's where that 65% is. Ding, ding, ding. Now, the investor might say, look, I'm going for that last 40 bucks, but I'm not going to give the 255 back and the max loss. And this is where the investor might squeeze the stops. Be careful, though, because when the bid-ask spread on the options are wider, it's going to be harder to actually do that. Okay. All right. Good, Peter. That was for you, by the way. All right. Now, by the way, this is everything we talked about was like basic math, adding, subtracting, dividing. It was just basic math. And by the way, it's the same math over and over again. Now, let's kind of fast forward. Are there any other questions? One of the questions that actually got brought up was, well, what about UNH? You haven't said UNH yet. Okay, that's true. I haven't. Now, the UNH is not a long call position. Let me actually cancel that. What is the position? The Johnson & Johnson was a long call. Time decay, theta. The position on United Healthcare is shares of stock. That doesn't have time decay. Okay. And now what you're going to now notice is, well, why are we going to sell that since we sold the Johnson & Johnson? Well, one has time decay, one doesn't. Okay. And what you're now going to notice in the other one with the long call, it was actually going to be borderline in the window of 4 to 10 days to expiration. The UNH does not have an expiration and there's no theta. Now, does that mean we can't raise up the stop? We could. Let's go to actually do that. Just be disciplined. Okay. So we go back and say, well, what can we do with the stop? Well, where's the stop now? Right there. Could we move it up a little smidge, maybe to about $400.36? Let's do that. Do not click on the X because it'll cancel the order. And we're just going to move it up to about right there. Send the order. And now we're going to let it play itself out. Target is still the target. Where is it? 472. Stop sitting here at $400.35. Could move it up a penny, but it's right at those white lines. Now notice, if the white and red line are been the same level for day after day after day after day, it just says that the low over the last 8 or 10 days has not changed. The key word is yet. If next week on Monday and Tuesday we can move up, we're probably going to see that line, the white or red line, move up quite high if it could. And it's probably going to be moved up to about 410. So sometimes the consolidation is good because it allows for stops to be moved up. Like we saw here, price goes up, it consolidates. And then what does that consolidation let it do? Move up the stops. Okay. I'm out of my time here today. But today we kind of talked a little bit more about management of positions, which we should. Okay. It's not always about buying stuff. Second thing we actually talked about is keep an eye on the semiconductors. Those might be an area where some names could potentially fall further. If that actually area falls further, it might put a little dark cloud over the NASDAQ, which actually kind of might mean that the S&P, which is tech heavy, might not go up maybe as much as if the Dow did. And so investors know the allocation and they're playing in the areas where they think there could be strength and not weakness. Okay. Now, I'm out of my time. We got Brett Crowther coming up next. I'd like to say thanks to Connie Hill for answering those questions in chat. There is a survey in the chat. If you click on actually that link, it's just 2 simple questions. Now, here's the deal. When you come to class, you like to learn something where if you said, hey, I like to practice alongside the coach. Well, that's what we did here today. It wasn't just about buying stuff, talk about managing what we have. So you want to kind of make that as much learning as possible. Please fill that out. Thank you ahead of time for filling that out. And I read all of your comments and questions. Now, remember with what we've talked about here today, it was done for example, illustrative purposes only. Don't forget to subscribe. Remember that all investing involves risk. And this has been the class on trading the trend. Sometimes that might mean down, as we talked about. Thanks again. Stay tuned for Brett Crowther coming up next. Bye-bye.